وطن يعلمك ألا تكف عن الحلم، قيادة تدفعك لتجسيد الحلم واقعا، ورؤية هي مجد الحاضر وإشراقة الغد. بين الأهداف والتحديات نراقب الأحداث ونواكب المتغيرات. تمكين وتطوير وتعزيز ضمن مبادرات برنامج تطوير القطاع المالي المنبثق عن رؤية المملكة 2030. عصر جديد وفرص واعدة. تمثل الصناديق الاستثمارية وجهة أساسية للاستثمار الجمعي، محفزة الأفراد على الدخول في فرص لم تكن متاحة عبر مبالغ محدودة وتنوع أكثر تحت مظلة مؤسساتية ومحترفة، ما جعل منها عاملا في ضخ سيولة نقدية في مختلف قطاعات الاقتصاد السعودي، عاكسة بذلك أحد أهم الأدوار الداعمة له. تطور ملموس وحراك تنظيمي تشهده صناعة الصناديق، وتتعدد أنواعها وتصنيفها من حيث طبيعة الأصول المكونة لمحافظها الاستثمارية، وتدخل عصرا جديدا بعد تمكين التقنية المالية من إضافة بعد جديد يمكن من زيادة قاعدة المستثمرين وطرح فرص استثمارية واعدة، يجعل تأثيرها مضاعفا في تعميق السوق المالية، يتوازى مع تطورات تنظيمية ورقابية تدرس الأداء بما يرفع من مستوى الشفافية ويعزز مبدأ حماية المستثمر وفقا لأفضل المعايير الدولية في هذا المجال. نتحاور لنتقدم.
مرحبا بكم في انطلاق أعمال النسخة الثالثة من سلسلة حوارات مؤتمر القطاع المالي بلا بلا بلا. السيدات والسادة الكرام، نرحب بمعالي الأستاذ محمد بن عبد الله القويز، رئيس مجلس هيئة السوق المالية. شكرا معالي الأستاذ محمد بن عبد الله القويز. والآن نبدأ الجلسة الحوارية الأولى، التطورات التنظيمية والفرص لقطاع الصناديق. رحب بمدير الجلسة الأستاذ أحمد القصبي، الرئيس التنفيذي لشركة صكوك المالية. والآن نبدأ الجلسة الحوارية الثانية، عصر جديد للصناديق، خلق قيمة طويلة المدى متماشية مع رؤية المملكة 2030. نرحب بمديرة الجلسة الأستاذة منيرة الدوسري، رئيس إدارة الأصول، شركة العربي المالي. نتوجه الآن لاستراحة مدتها 40 دقيقة، وندعوكم لتناول القهوة والوجبات الخفيفة في الباهو خارج القاعة. ندعوكم بعدها لاستكمال برنامجنا. حضورنا الكرام، نأمل منكم التفضل بالجلوس على مقاعدكم. سنبدأ بعد 5 دقائق من الآن. Ladies and gentlemen, please take your seats. We're starting in 5 minutes from now. Thank you. السيدات والسادة الكرام، نلفت انتباهكم إلى أن الترجمة الفورية من العربية إلى الإنجليزية متوفرة طيلة فترة حوارات، وبإمكانكم الحصول على أجهزة الاستماع إلى الترجمة عند مداخل هذه
النقدية في مختلف قطاعات الاقتصاد السعودي، عاكسة بذلك أحد أهم الأدوار الداعمة له. تطور ملموس وحراك تنظيمي تشهده صناعة الصناديق، وتتعدد أنواعها وتصنيفها من حيث طبيعة الأصول المكونة لمحافظها الاستثمارية، وتدخل عصرا جديدا بعد تمكين التقنية المالية من إضافة بعد جديد يمكن من زيادة قاعدة المستثمرين وطرح فرص استثمارية واعدة، يجعل تأثيرها مضاعفا في تعميق السوق المالية، يتوازى مع تطورات تنظيمية ورقابية تدرس الأداء بما يرفع من مستوى الشفافية ويعزز مبدأ حماية المستثمر وفقا لأفضل المعايير الدولية في هذا المجال. نتحاور لنتقدم.
مرحبا بكم في انطلاق أعمال النسخة الثالثة من سلسلة حوارات مؤتمر القطاع المالي الممهدة للدورة الثانية من المؤتمر المزمع انعقاده في مارس 2023 بتنظيم من شركاء برنامج تطوير القطاع المالي وزارة المالية والبنك المركزي السعودي وهيئة السوق المالية، وبمشاركة عدد من أصحاب المعالي ونخبة من خبراء المال والأعمال، وبحضور المهتمين من القطاعين المالي والاقتصادي من داخل وخارج المملكة. السيدات والسادة الكرام، نرحب بمعالي الأستاذ محمد بن عبد الله القويز، رئيس مجلس هيئة السوق المالية.
In the name of God, the most merciful, the most gracious, Your Excellencies, Your Royal Highnesses, ladies and gentlemen, peace be upon you. Welcome in a new session of the Financial Conference Talks, which became today a new platform to discuss challenges and opportunities in developing the financial sector to ensure its effectiveness in financing the savings during the pivotal stages in the upcoming days. You all know, our dignified guests, that our country is aspiring to be amongst 15 economy in the world by 2030. And we cannot do this unless we invest in the investment and having new sectors which will take new financial resources, and this CMA comes into effectiveness in financing these startup projects that we cannot be financed in the traditional financing systems. That's why our talk today will be tackling two of the resources of investment and financing in the upcoming period, which is the investment funds and the debt market in the other hand. I will start with the investment fund, since it's the oldest and the most mature amongst them. The investment funds in the KSA has started before having the CMA decades under the umbrella of the Monetary Institute due to its importance to increase investment, whether in CMA and in the economy as a whole, and to collect the savings and professionally, and this growth has been continued in the investment funds. The assets has been reached 530 billion Saudi riyal, growing annually with 20% during the last 5 years. The participants has exceeded 675,000 participants, which the investment funds has not been witnessed before. During the past years, the focus has been on the financing the investment funds and the available options, and we saw developing in the private ownership and in all its types. Investment funds for the facilities is the recent that has been launched and has been organized in accordance with SAMA, and even the unprofitable sector has a share in the investment funds by launching the investment in accordance with the other sector to be financing to the unprofitable sector that enhance the governance of the investment and its sustainability. Now, these categories of the investment funds representing that which exceed more than 100 million riyal, which represent 20% of such funds. Although the investment funds is related to the economical session and its growth and variousness, was support the debt market targeted its targets and plans of Saudi economy until 2030, which requires investing that exceeding 12 trillion riyal during this period until 2030. Although these requirements will be itself, so the capital that can be provided to any loaners at the horizon that under the same period, the relation between the CMA and between the two centers to deposit Extreme and Eurocall, which will enable international investors to invest in the governmental tools by using their available which will enhance the investment in the debt market and will increase its flexibility. These developments, by including the tools of governmental debts into international indicators, which is IBOX International and the indicator of FTSE of the governmental documents in the startup market. Currently, the work has been available for such indicators, because joining such indicators increase the increase the financing from the international market, which will have so many variousness in the market, and enhancing the flexibility and the money in it. After this development, this tangible development in the governmental debt tools, to build the tools in the private sector, which included the licensing of the most largest agency that worked here in KSA, and and we had so many amendments on the to felicitate the debt issuance, the direct of the date, which gives an extra channels for the debt, and which will increase this and lower the cost. The financial institute and assets and the group financing is amongst the most accelerating model in the financial technology in the CMA. Under these efforts and looking to the economical conditions, the scale of the debt market has reached 25% of the GDP in the first half of this year, growing 52% 5 years ago. And the scale of debt, 107 billion real since the beginning of this year until the half of the year, and it doubled in the same period of the last year. This even though the benefits rate in the same period. This accelerated movement in developing the debt market, we are in the earliest stages, and we're still working on the regulations to the debt tools, so for so many facilitating. And I want to stress and to thank on the current efforts of the tax committee in the investment debts, and in the which will have so many impacts in increasing the attraction of such sectors for investors and contributing in the development of the economy. After this, about the investment debts and the debt market, I will conclude what I started with, that the investment needs for our economy during the upcoming period will witness for the first time the transformation of KSA of an exporter for money to an importer for these money, and this will require from all of us to have our financial sectors by all its components eligible to play this new role in this exceptional period of the history of our beloved country. Thank you so much for attending, and I look forward to participate with you and learning from you by the sessions that are going to be included. Thank you so much.
شكرا معالي الأستاذ محمد بن عبد الله القويز. والآن نبدأ الجلسة الحوارية الأولى. التطورات التنظيمية، فرص لقطاع الصناعة. رحبوا بمدير الجلسة الأستاذ أحمد القصري، الرئيس التنفيذي
The CEO of Sukuk Financial Capital. Hey, good morning. Good morning at the first session of the talks of FSDP. Before I invite the panelists, I will share some figures related to the funds sector. The FSBD aims to raise the traded assets by funds by GDP from 17% to 44% by 2025. And FSDP as well seeks as well to increase the percentage of traded of institutional investors of trading assets from 36% by 44% by 2024, as His Excellency Guiz as mentioned. That rated assets of is of 35 billion Saudi Riyal. Without any further ado, I would like to welcome the panelist, Mr. Fahd bin Hamdan, for the listed companies, and Mr. Mohammed Al-Rimeh, the CEO of Tadawul, and His Excellency Tariq Sideri, CEO of Jadwa, and Dr. Jadwa Company, and Dr. Abdullah Shuair. Hey, good morning. We will start with you, Mr. To talk about the strategy of the Commission and its impact of the fund. And first of all, I would like to start with the CMA strategy. Hey, good morning. The strategy is so keen to build a strategy which is in alignment with the key pillars of the FSDP, which is the enablement of financial institutions for the growth of the private sector, and enhance and the enablement of financial planning. In this context, the CMA has a goal in this strategy that the capital market will be the leading market in the Middle East and among the top 10 markets in the world. So based on this, we have built our strategy on 4 pillars, which is facilitate funding by and development and improvement of stocks and debt instruments. The second objective is enhance investment and raise the attractiveness of the market for the foreign investors. And the third pillar, which is enhance confidence by adopting methodology related to the risk bending methodology, in addition to raising the governance and transparency for the participants of the markets. And the fourth one is to enhance the capabilities of the participants in the market. Mr. Mohammed, can you give us a background based on your experience about the latest development of the market of funds? Hey, good morning to you all. I'm going to talk about a part of the funds of markets which is related to the traded funds, which is 3 key funds. The first one, which is more effective and the bigger in volume. So it's started in 2016 in November. The fund with the total market share 50 millions, and it has it was popular. It was a very popular investment locally. We're going to talk about 3 investors at the level of the Saudi market, and it has removed a lot of obstacles for the need of and the easiness of exit. So this is creates an opportunity for the low risk assets, and this has enhanced the momentum of the funds and the development of assets industry. We can see a lot of things which has been changed, such as the contribution to this to this end, the enhancing the procedures by CMA to ease the business of asset management in cooperation with the CAT and Ministry of Justice, and dissemination of information for the investment and the risk assessment in alignment with our vision, and the improvement of the mortgage we have taken from the angle of the real estate investors. When they reach maturity and the increase of income, they can become traded fund. This creates additional momentum for the real estate development. One of the things that we forecast for the future is the competition, and we will have a very specialized sectorial investments. We focus for the real health care and hospitality, and we have seen the achievements, and we have allowed for the funds to be invested in the parallel markets. This is a very insignificant number compared to the other funds. So thanks to Allah, one of the things which were positive based on transparency, and we can say the procedures taken by CMA, and a lot of funds joined international indices, including the global one. The second type, which is non-traded funds, which is micro and smaller one. We have two funds of 1 million Saudi riyal. They invest in different assets except the real estate sector. So this is a comparative and relative experience, and knowing the investment, knowing the assets that can be managed and invested, and we have high flexibility. And the third one, which is the most important one, in which will be will dominate in the future, which is the traded index funds. The first one was launched in 2010, and we have only 3 funds. We have taken long span of time for the development for the traded indices until 2020, and we can say that there is an accident which established the momentum for launching such kind of funds, which to trade in other assets, such as public bonds, which has huge markets and high appetite. And the commodities as well is one of looking into the diversity of investment. So it created a good means for investment in this asset, and which is expected now, the trend right now, the latest trend investment, based on surveys and forecast and outlook for the future. So the outlook will be based on 3 pillars. The first one, which is a specific systematic approach, specialized in sustainability. The second pillar, global interest and the global bonds, and we have such kind of funds traded in American markets and U.S. markets, and the investment in Sukuk, with the latest development and the latest development in debt market. This is can reflected on the performance of indices. As I can say that if we have a new asset, you should have the main components to form the additional indices funds. The funds launched lately with the momentum reached 100%. We can talk about this is sectorial funds, such as the industrial one for mining. For instance, gold, one of the things that we are witnessing, the increased number of listed companies at different levels and multiple levels. So we can have funds specialized in industry or mining, or can we say that we have one in the materials, and but interested in the sustainability and social responsibility. So we have big number which can create a lot of things. We can see the latest development, which is the in boosting and enhancement of the infrastructure for the capability of deposits and flows, and this has helped the asset or the fund manager to attract more funds. And one of the things that for the future, thanks to Allah, we have the asset industry with the big volume where it can be active, not stagnant one. So this is with the future development, the performance will be remarkable as expected, and we can use the fund managers to leverage the market that we have and to venture into high level and large base of investors. By 2020, we have witnessed double of investors from 160,000 investors to 40 to 420. And despite what we have seen in the pandemic and the fluctuation of the markets, and based on a well-aware fund manager, and with the reducing and mitigating risks, and this is one of the things which will be a turning point for the development of the financial sector and CMA and central bank in the sandbox. We have seen a lot of companies, fintech companies, which increase the awareness and the education, and we have lab forgets for the indices, and you can see a lot of investment in such regard. Investment is based on the risk appetite and risk assessment and the expected returns. Now we can take a step back to address the fintech companies. But Mr. Tariq Sideri, what is the definition of an institutionalization of the capital market, and what are the targets of the capital market? What is the importance of this methodology? I would like to thank you for having me. The definition of an institutionalization of the market to encourage and stimulus the investors to move from direct investment in capital equity market to invest in institutions licensed and well organized and well regulated, and under the organization and supervision of CMA, and we have the human resources devoted, high qualified to manage investment efficiently. The importance attached to the interest of the investor to protect their assets, to enhance the performance and maximize the return on investments in the long run. The main reason behind this, when we look into the Saudi market, it's a huge market, diversified market with a big number of companies. An equity market, it's hard for any individual to analyze the markets in optimal manner, even if this individual is specialized in market analysis and devoted to this approach. And now the investment in equity market requires a team with diversified skills and the qualifications which can and database and analytical tools to analyze each sector and the company and the strategies of each company, which can help them to set outlook and for the performance of this company to evaluate them correctly. If we look into the funds, the public funds in equity market, in the Saudi equity market, along the 3-5 years, the performance of such investment funds compared to the performance of the market exceeded 3.1% annually after the discount of fees and the cost of the funds, meaning that if the equity markets generates 7%. The returns of the investment funds has generated from 9 to 10%. For instance, this can give us a hint and a flavor about the importance of investment in institutionalized manner to enhance the performance of investment. No doubt that what we can touch and see in the Saudi market is in fact significant performance in institutionalization for the public funds with big number over the last 5 years, from 900 Saudi billion Saudi riyal for the double digits. If we take the public funds and the private funds, and the value increased from 300 Saudi billion to 700 Saudi billion. This is on the right track for the institutionalization, but we still have a room for enhancing and maximizing institutionalization in a bigger number and manner. If we look into the Saudi market, if we take the public funds precisely, the volumes compared to the market is 2%, while for the U.S. equity market reached 50%. If we look into the volume of the individual trading in Saudi market compared to the total trading, which is 70 to 80%, this is improvement. Great improvement, and compared to the U.S. market, for instance, the individuals represent from 10 to 20%. So we can say we are on the right track, and I think there is a room and a space to increase in institutionalization in the coming years. Mr. Tariq, for the private funds, but my question is addressed to Dr. Abdullah, based in working in emerging markets. What are the most important challenges faced by the fund managers and the opportunities? Thank you for having me. Emerging markets, by definition, emerging ones, the fund managers look for stability in the regulations and enabling regulations for the fund managers to establish, operate, and manage funds, and having the appropriate infrastructure. The most important one is the opportunities, economic opportunities to invest money from the emerging markets. And this is has a lot of economic consideration. For instance, the Kingdom of Saudi Arabia, which is one of the most important emerging markets, which attracts a lot of investment, and fund managers look to establish offices and funds in Saudi Arabia because of the economic economic opportunity, and for the other in fact, we have programs right now for awareness and education, including as part of the investment program. This is a stimulus, a big stimulus. The continuity for the development of the regulations is very important, and His Excellency and the coordination with other regulators is very important for us. This can create a lot of comfort for the fund managers and investors searching for direct investment and funding their funds onshore for tax consideration. Having such funds will increase inflows for in that market and other markets. Mr. Fahd, we have talked about the strategy. How can this strategy serve the fund industry as being investment vehicle which can serve diversified assets, including shares, stocks, sukuk, and other assets, real estate and mortgage. So any improvement based on is in fact reflect any development needed by such funds. So if we talk about the funds in itself, we have a number of initiatives launched by CMA recently, which the most important one is facilitate and attract investors by financial institutions to enable them to open investment accounts electronically, and as well as the enablement of financial institutions to attract and as well as we are working on the mutual recognition of passporting, which we look forward to that the fund managers will market private and public funds with the countries that we will have agreement with. One of the most important things that CMA is doing is to increase the products and funds available for the investors. Increasing such products mitigate the risk that having the concentration of investment on specific areas. Recently, we have enabled fund manager to establish and run the non-profit funds and financing funds. So we have as well as very important aspects with the zakat to solve and issue to enact rules and regulations for the taxpayers. It's no secret that zakat and the tax is one of the most important factors which stimulates foreign and local investment. Such rules and regulations will clarify how to calculate the zakat on the funds, and the taxpayer is not the fund, so there is no zakat burdens, but the taxpayer is the owner of the unit, but there will be a mechanism in place how to estimate such taxes. The final point is CMA has adopted a number of qualification tests based on the latest regulations, which require some sort of upskilling for the human resources working in the market, which will be positively reflected on the performance of the capital markets. Mr. Mohammed.
When it comes to the distribution of the fund units, what do you think about this experience? And I'd like to hear from the other colleagues when it comes to this facilitating the accessibility of the investment products in all its types. When it comes to the facilitating to the accessibility to the investment, this is the main goal. If we notice until the beginning of the registration and explaining the idea and giving the strategy, how can we invest one of the examples that we talked about by cutting periodic amount of money on various assets, and this depends on the revenue that you're liking and the management, the risk that you have, and after this you build a strategy. And when it comes to the indicators of this gave an opportunity for the investors to the accessibility. This is existed in the Saudi market, but it's not distributed through the technical companies. the upcoming challenge is providing extra indicators and more funds. So it polarize larger segments of investors, and if there is any change of risks, all the assets that he needs, he got it. And now I'm seizing the opportunity in Dr. Abdullah to work. We have the legislator here amongst us. These are the challenges faced by the indicators funds depending on the financial technical companies. It is the opportunity is very excellent under the supervision of the CMA. What's your experience and what's your view in using technology now is something very necessary, and it's not a choice. Earlier, the special service or what it called the red carpet service that the relation manager gives him papers to fill it out, and this used to be a special service. Now the client expectation is very different. The client he doesn't need to be here any any paper procedures or visit or an interview and going back and forth. The client expects that he can open a bank account on his screen and can participate in an investment by a click of a button, and update his information very easily, and accessing his information and his bank account on the screen, whether it's the computer, his cell phone, and other things. That's why this became a need to improve the service and meeting the expectation of the client today, and also it's a need to improve the efficiency of the company itself. When you think managing and the implementation order and the long procedures with the clients with paper, this gives so many complexions and so many errors. Whereas whereas the work is done by the technology, it's better service for the client and more high efficiency for the institute itself. Yes. When it comes to the legislation to the financial technological company is easier than the licensed companies, but the standards will be very high, and such companies needs to adopt such technology so the outcome be appropriate for the client. We see this in so many markets. The fintech start with the systems and less requirements than the CMA, but by the time there is a converge and compatibility with the conditions. Before concluding, if you could share some statistics when it comes to the individual investors in the Saudi market, what's your view on this? I'd like to comment on the fintech. We are aspiring the investment in the funds to be easy as a click of a button, as Mr. Tariq mentioned. Now the payment process is very easy, and opening a bank account has been easy. So many banks has offered this service online, and the direction and the trend in the Saudi market. When it comes to the statistics, one of the pivots of developing the financial sector when it comes to the financial inclusion and in the bank system and the financial system as a whole, the percentage was 71% of the individual here in KSA who are adults have a bank account, and the percent now the percentage is there is there is some biases amongst the individuals, as my colleagues has mentioned. The financial technology to ease and facilitate the process of investment to be less amount than the funds, to create first the financial awareness and having the experience of the investment in real life. We did an statistics on the performance of the Saudi market and or the Saudi investment since 26th of February 2006, and so many people remember this date when there is a collapsing of the financial market, of the stock market. So many people has freaked out. We did a track of 7 funds at the time, and it's continuous until the last month, and we found that the recovery of the investment, all of this were positive, and it has reached 88%. These one of the biases. So many people who gone through that time and has lost until now is hesitant to give his money to the managers of such funds. The other statistics in the financial stock in the American financial market in 1995 until 2014, 15 years, has compared the performance of the individuals in 401k, that is specialized for voluntary retirement plan, and so many funds and indicators. They found that the individual has achieved 2.4% of revenue, and which is very similar to the when it comes to the characteristics of the assets is very higher than this. It has also reached 12%. These statistics is part of the financial behavior, and we look forward to have such statistics to be issued here in KSA to applaud the performance of such funds under the light of the governance and the legislation, which gives more ease for the investors to increase his participation in all types of funds. This also depends on the developing in parallel in the financial technology and the infrastructure, and I believe we are one of the best countries internationally when it comes to the financial technological infrastructure and the legislation in the cybersecurity. Not only will overcome the performance of the market, but the inflation. Unfortunately, our session has ended. Thank you so much on your participation.
إذا نشكر مدير الجلسة والمتحدثين في هذه الجلسة. والآن نبدأ الجلسة الحوارية الثانية. عصر جديد للصناديق، خلق قيمة طويلة المدى تماشيا مع رؤية المملكة 2030. رحبوا بمديرة الجلسة الأستاذة منيرة الدوسري، رئيس إدارة الأصول، شركة العرب المالية.
Good morning and welcome. With financial sector development program, ambitious KPI, and having supportive regulatory environment accompanied with developed digital infrastructure and advancing capital market in Saudi Arabia, we believe we have entered already a new era for investment funds in Saudi Arabia. Today we'll be discussing innovation, international trends, regulation, awareness, and aspiration. Please join me to welcome our esteemed guest, Nasser Al-Ajaji, Director General of the Financial Sector Development Program, Abdelhadi Shhata, Head of Financial Markets at GIB Capital, Sultan Ghaznawi, Founder and CEO of Awaid. Welcome. Okay, so let me start with you, Nasser. And let's start with discussing the milestone of the Financial Sector Development Program and its support to the funds industry. So we have been witnessing, since the Financial Sector Development Program was launched, many impressive achievements. Increase the depth of the market, number of listing, and also enhancing the infrastructure for new products to come to the markets. First of all, just on a macro level, how did you see that progress, and how did it, reflected into the fund managers internationally, not locally, coming to the Saudi capital markets?
Thank you very much, Munira, and I'm glad to be here with these esteemed guests. Very quickly, looking at the program from a bird's eye view, we have four key strategic objectives. The first is to enable the financial institutions to support the private sector growth. Number two is ensuring the formation of a capital market. Number three revolves around financial literacy and saving. And last but not least, which was recently announced, which is the fintech strategy pillar. If I zoom into the second pillar, which is ensuring the formation of an advanced capital market, we've set very ambitious targets. We've set a very clear roadmap in which we aspire to eventually achieve by the conclusion of the program, which has been extended until 2025. Most notably, I'll maybe choose two of the key indicators. One of them is the asset under management to the overall GDP. What we aspire to achieve is almost doubling that, reaching almost 31% by 2025 from the baseline of around circa 16%. The second is on what you have just mentioned, on attracting international investments and increasing the share of international ownership in the local stock market. That also we aspire to push quite aggressively, pushing it from almost 13% when we calculated the baseline back in 2019, all the way up to circa 18%. So that 5% jump is what we are aspiring to achieve. Now, looking at the progress of what happened, obviously we look at it holistically, right? Fintech, as we heard in the earlier session, is an enabler. Regulations is an enabler. Infrastructure providers are enablers as well. For us to really achieve these targets, we've set certain initiatives, we've set certain task forces, if that's the right way of saying it, with our very strong regulators and partners within the program, in which we eased the qualified foreign investment requirements. We have assisted in, or actually we have been listed in multiple international indices. That has really spurred an influx of investments into either equity or debt capital markets in general.
Yes.
So that's maybe a high-level answer, which gives you a very clear focus on why we're targeting the asset management industry, us as a program, with the support of the other streams and the other strategic objectives. Let that be fintechs, let that be regulations, and so on.
I have a follow-up question for you. How can funds today play a role into helping in accomplishing the financial sector program goals and KPIs?
So while we were developing while we were refreshing our strategy, so one of the key growth areas that we have identified was shifting the market from it being a retail-based market to an institutional-based market. And we heard the colleagues in the previous session as well, they highlighted that component, which we at the program fully agree with. We are fully in support of that. We have put into place the necessary mechanisms to assist and support and incentivize that shift. Back in I believe 18 or 19, the retail value of trades to the total trades were roughly around 80%. We are getting to circa 70% around, hopefully by the end of this year, which is a very strong shift. So we're somewhat steering the ship in a different direction now. But put simply, we believe funds in general, publicly traded funds specifically, will assist us in that transition. It will push the retail investor to grow his confidence into putting his money into public funds, let that be ETFs, let that be index funds, or any of the other mutual funds as well.
Thank you, Nasser. Abdelhadi, around the same subject, the Financial Sector Development Program, how did you see the support of the program to the growth of the asset management industry in Saudi Arabia and funds specifically?
Yes, Munira, I think the program is very supportive to the growth of the asset management industry. If we look at the two strategic pillars of developing an advanced financial market and encourage and enable financial planning, we have 15 different initiatives under these two strategic pillars. 9 of the initiatives directly and indirectly benefits the growth and supports the growth of the asset management industry. And in fact, 6 of these initiatives has the assets under management as a percentage of the GDP as a main key performance indicator. Now, assets under management is the biggest driver for growth within the asset management industry. It drives profitability, it drives investments and expansions within the industry. If we look at how these initiatives will support the industry, now basically it will enable the industry to generate higher returns to investors and becomes even more attractive. It will improve accessibility to local and international clients by the service providers, and it will help in launching and establishing new investment vehicles in the market. If we look at incentivizing private sector for listing as an example, and as we all know, asset management and mutual funds in particular receives one of the highest allocations in institutional book building and IPOs. That is resulting in higher investment returns within the public mutual funds, and thus should be followed by more interest and appetite for investment from the investment community. If we look at the selling shareholders in the private companies, these are potential investors into the asset management industry as well. Expanding the distribution channels beyond the service provider channels only to include other distribution channels, and even enabling mutual recognition of the investment products outside the kingdom will improve the ability and accessibility to a wider pool of potential investors, which eventually should result in higher assets under management within the industry. Under the strategic pillar of enabling and encouraging financial planning, we have the initiative of establishing the national saving entity. Eventually, these savings will be directed to the financial markets and investment vehicles which are managed by the asset management industry. Even some of the completed initiatives that already took place benefited the industry, like building the regulatory frame regulating the endowment funds. We've seen 10 endowment funds in the market. Even introducing the REIT regulations resulted in 17 different REITs being listed with a 300,000 unit subscribers. That is a significant increase in the number of unit holders within the industry. Last but not least, even supporting growth in PE and VC business resulted in growth in these two asset classes over the last 1.5 years. We've seen 14% increase in number of private equity funds, 130% increase in VC funds, and AUMs under these two categories increased by 77%.
Thank you, Abdelhadi. So basically you're saying there is a complete alignment between the asset management industry and fund manager and the financial sector development program targets. That's a very good point. To you, Sultan, again, under the same subject, we want to talk about fintech. Fintech was added as the fourth pillar to the transformation strategy of the financial sector development program in a clear testimony of the importance of the digital transformation in the financial sector. My question to you, how do you see that supportive to the growth and the development of the fund industry in Saudi Arabia?
So first, we look at fintech as an enabler to the financial services sector. And Saudi Arabia is not just one of the fastest growing, but is well equipped with a really advanced and robust fintech infrastructure compared to even other G20 nations. And if we look at the Financial Service Development Program fintech strategy, and more particularly the impact of fintech labs using the sandbox model, we can see the rapidly growing number of fintech startups that have been licensed. So the target is 525 fintech companies by 2030. Today we're at 155 licensed fintech companies with the objective of launching them to solve for and expedite the transformation of the financial services sector. If I may just take a moment to try to shed some light about the impact of fintechs to the development and growth of investment funds through the following storyline sequence. So it starts with a very strong digital infrastructure. Today in Saudi Arabia, we have a very high internet penetration. We've got the relevant government platforms such as Abshir for ID verification, or Wathiq for institutional ID verification, and other relevant government platforms. We have got a growing cloud infrastructure with global players expanding in the market. Then comes the FSDP with its fintech strategy and variety of initiatives. If we take one of the licenses that directly impact investment funds, which is the fundraising license, and try to dissect for the stakeholders that this license solves for. We start with the CMA, which has an objective to make investment funds more accessible to retail investors, as well as to develop the process for institutional and professional investors via fintech and technology. Then you've got the retail investor who historically did not have access to private funds. Today, using technology, using fintech, and with the relevant regulatory framework, they are able to invest in these private funds using just with the ease of their hands. And if we look at the third stakeholder, which is investment opportunities in general, whether it was in private equity, real estate, direct and indirect finance, and what have you, today they are becoming way more aware than they used to about investment funds as a fundraising instrument. And so what we saw that different is that we expected that our customers are always going to be fund managers who have funds, and then we will go and list them. But what we found is that opportunity owners are coming to understand with the objective of wanting to understand more about investment funds and so on. So these opportunities are now channeled to fund managers, creating more opportunities into the investment funds. Then fund managers are not just using Awa'id for fundraising, but it's also because the process of using fintech makes investing easy even for institutional, professional, and more efficient. So if we look at this overall impact, we'll see that with this new access for retail investors, we'll have them invest more in professionally managed funds as opposed to uninformed investment decisions in public equities and other investment assets. The effect of that is a much more efficient market that is attractive for both local and international investors.
Thank you, Sultan. Maybe I have a follow-up question for you. There is like a perception in the market that the platform that does the fund distribution mostly focus on real estate funds. Can you just, give us some insight into that? Is this perception is true, or do we see today more, accessibility to other products, venture capital, private equity, and other more innovative products?
So we were very keen to make sure that the positioning of the platform is not exclusively for real estate funds. But so if you look at the second fund that was probably one of the first funds listed via platforms, it was actually a private equity pre-IPO fund. And on that note, we saw something very interesting. So the average number of investors per fund on fundraising platforms is actually above 5,000 investors. So if you're a private equity company and you're planning to go to IPO, imagine having 5,000 ambassadors that are already invested in your company. When time comes for the IPO, you will have 5,000 promoters to your IPO. As well as awareness about the companies and the services itself. We were lucky to list a group of media and entertainment companies that were close to consumers. So those companies will have a better impact than companies who, for example, work in the industrial field. We do see that there is a pipeline of direct and indirect funds through fundraising platforms, and that they're going to become way more popular in the coming period. Obviously, interest rate did play a role in that, making real estate funds not less desirable, but impacted negatively with the raised interest rates and so on. So that will even expedite further the growth of non-real estate funds and more on private equity, direct and indirect finance, and so on.
I would like to add maybe to what Sultan has mentioned, and to be honest, I think it's a very understandable perception. Now, the reason why is, again, linking back to the previous session, it's about investor demand and investor perception, investor sentiment, right?
Sure.
If we look at the real estate market in Saudi, it's mature, it's growing, it's an investment sector that many of the investors actually look at.
Yeah.
But if you really look at the numbers, right? Out of the total number of, let's say, public funds or funds in general, roughly around 30% of them are real estate based. But if you look at the other 70%, they're equity, diversified, specific alternatives, and so on. And if you look at the public versus private real estate funds, you see on a public level, it's roughly around 10% of the publicly available funds, whereas in the private, it's roughly around 30%. So that you see a lot of investor demand when it comes to private real estate placements, private real estate projects, and so on, in which they create these funding vehicles to support the development of the sector. But put simply, it's driven by investor demand, it's driven by investor perception, yet we still see the bigger chunk of the market, the bigger chunk of the fund market is leaning more towards equity, debt, and alternatives, obviously with real estate having a heavyweight in that overall pool.
Actually, this beautifully takes me to my next question, and it is about innovation. I want to ask you, Abdelhadi, with the growing number of CMIs and the growing number of funds, and we keep seeing, as maybe Nasser beautifully have pointed out, that there is a big concentration in classic asset classes such as the real estate, which is simple to understand by especially the retail investors, public equity. Recently, the closed-ended tradable funds also is quite popular. My question to you, do you think CMIs or asset managers are encouraged enough and willing to take risk in more innovative products? And a follow-up on that, does the regulation, in your opinion today, support innovation?
Yes, Munira. Now, asset management business is a very profitable business. It contributes the largest percentage of all the investment companies' income and the most stable source of income. So definitely companies are encouraged to come up with innovative products, however subject to sufficient demand. Now, mutual fund business tends to be a little bit more costly for service providers. And this is why we get to see asset managers testing the market appetite through DPMs, private funds. And if they feel the demand is sufficient there, usually that gets followed by a launch of a public fund following the same strategy. We have seen over the recent years a major upgrade to regulation, to the infrastructure, and as a result, we've seen asset managers reacting to these changes. So we have seen different types of strategies, different types of styles, different types of investment vehicles being introduced to the market, freestyle funds, passive funds, 17 REITs, closed-ended funds. So usually they react if the demand is sufficient and is there in the market. However, I think that the industry can still do a little bit more to cater for the saving objectives of the 2030 vision. And as far as the regulatory environment is concerned, I think the regulation allows or gives space for the service providers to innovate, to come with new type of products. However, I believe that there is always a good chance for improvement and update to regulations and infrastructures, which will definitely accelerate the launch of these innovative funds.
Excellent. So the asset managers will follow as the demand become there. And in terms of the regulatory environment support, we saw in the past couple of years a lot of regulation that support new businesses or funds in the asset management industry. Do you have any comments on that to follow up on this point?
Yes, now definitely the relaxation of regulation and more specific coverage of certain asset classes gives clarity to the service providers. And this is why, as I mentioned earlier, you get to see them after testing the appetite on the high net worth and institutional front coming to the retail front. So I think regulation gives general guidelines to what asset managers can do and should do and how they do it, but it leaves a big space and freedom for the service providers to innovate and differentiate themselves. So we have seen the market offering the plain vanilla strategies for a long number of years. Now, regulation states that you can invest in equities for clients, but it doesn't tell you how you should be doing that. Yes. So as the market sensed the need for more concentrated, more conviction-based strategies, we started to see that coming on the DPM front, private fund fronts, and then followed in multiple funds following the same strategy within the public domain. So again, I don't think the regulation prevents innovation, and even I think the way today the regulator listens to the APs through the dedicated committees that represents the industry gives a lot of comfort and space for improvement in the industry.
Thank you. That's a very good point. I'll ask you a question, Nasser, but I'll come back to you, Abdelhadi, with a follow-up question on the same subject. Same question. How is your views on the support of innovation in the asset management fund industry in Saudi Arabia, and maybe under the umbrella of the Financial Sector Development Program particularly?
So maybe I wanted to add to what my fellow panelist was saying around the importance of ease of regulations and so on, and then that should stimulate the demand and innovation. We truly believe that there is a delicate balance when it comes to regulation, and we take it quite delicately. And the reason why is, as we heard previously, investor sentiment and investor protection is the utmost priority, and that is something that we have to keep in the back of our hand whenever we look at regulations, whenever we look at policies and so on. But then that brings the question of the chicken and egg, right? Does the demand come first or does the supply come first? And then linking back to what my colleague was mentioning, that's the $1 million question at the end of the day. Should the products come before the demand comes? Because the demand basically will only come if they see sophisticated, value-added products in which they can on board or they can invest in.
Sometimes demand and product, and sometimes demand, product, and regulation. Because regulation, by the way, also encourages product issuance, I believe.
Absolutely, absolutely. But going back to your question very quickly, how we look at it, we split it into two things, right? So whether FSDP is in support of the innovation of the asset management industry in general, the question or the answer would be absolutely yes. We're in full support. We saw the regulatory fintech labs in which it supports innovative products, specifically innovative fintech platforms and products as well. What we believe or how we perceive it at FSDP is we look at it in two different levels. One is innovation when it comes to technology and infrastructure. Two is innovation when it comes to novelty, when it comes to value-added funds. If we look at the first one, and I think the colleagues already covered most of it or a lot of it, which revolves around the initiatives and the targets that FSDP has put into place, specifically when it comes to the fintech strategy, when it comes to regulatory enablement, when it comes to testing or sandboxing some of the ideas and so on. But most importantly is the novelty when it comes to the fund products. Now, why are we saying this? We still see there are a lot of gaps within, quote unquote, the fund industry in which no one has really tapped into. Let that be thematic ETFs, let that be thematic index funds, and so on. So we truly believe that's how we really look at it, technology-based innovation, and then also novelty of the structure itself.
Very good point. I think also I'll take that last point and build on it. Abdelhadi, what are the international trends in the fund industries that maybe we're missing today, maybe they're evolving and we need to give them some attention? If you can just give us a couple of examples to just look at it from little bit macro level.
Sure, Munira. Now, first of all, I think the shift from active to passive is still continuing. So we're still seeing money being shifted from actively managed strategies to passively managed strategies. I think for multiple reasons. One would be the lower cost of passive strategies and their ability to deliver similar to market returns in a big bull runs in the financial markets. If you look at the US asset management industry, I think over the last 10 years, the passive AUMs moved from 20% of the industry to 53% in 2021 out of the industry, so more than doubled in 10 years. Now, this is causing a pressure on the fees, on the other hand, on the industry, given that active asset managers are trying to retain their clients. They have to address the continuous demand from clients for lower management fees and expenses for the services, and this is driving the average management fee down within the active industry. Now, that is forcing the active asset managers to start a search for operational efficiencies and consider technological platforms and solutions that could improve the customer experience and differentiate their reporting. And as well, it is directing or resulting in more consolidation and centralization of services within the global asset management industry to lower the operating cost of the service. The last trend that I would like to comment on is the ESG investing. It is continuing to grow very fast. Expectations that this industry will reach $53 trillion by the end of 2022. 7,500 different ESG fund is out there. The inflows to the industry during 2021 was $627 billion, up 70% from 2020. So a lot is happening on the ESG space, and not only on the inflows front. I think even policymakers are turning their attention today to the ESG funds, trying to standardize the ESG reporting and ESG data disclosure within the asset management industry.
That's a very good point. Maybe I add to it, I read in a report recently that third of the AUMs was raised in year 2021 was actually focus on ESG products. So it's definitely a very strong trend. Sultan, innovation is in the essence of fintech. But my question to you, are we ready today as a Saudi investor, are they ready for innovative product, an innovative way of doing their investments?
So I believe that we're already there. So, and technology or fintech more specifically is in my opinion, the major driver of innovation in the investment funds industry and investments in general. And if I can give you some very basic examples of innovations that are enabled via fintech that directly impact investment funds. So back to the 5,000 figure, having the average number of investors in funds raised via fundraising platform. Imagine if you're going to KYC 5,000 investors in the traditional paper form. Imagine the cost, time, and effort. It would probably not make it feasible. But with digital KYC that are created via these fundraising platform, you're now exponentially growing the number of investors into investment funds. Take another example, another innovation, for example, which is a virtual account, which in Saudi Arabia today, I believe that we're pioneering that. The concept of virtual account doesn't just help investors, but it also helps fund managers. So for investors, a seamless charging experience. I mean, today we have Apple Pay, card and bank transfer, but maybe take a point on the Apple Pay concept. So we've been monitoring a behavior, which is very interesting. So the first time a retail investor comes on the platform, they would charge their account with Apple Pay, whatever the limit is or an amount to invest. Then next time they decide to invest, they would more often charge with using bank transfer with a bigger amount. So sometimes making it really easy is a hookup to actually get people to save and hence to invest and hence save. Also, virtual accounts impact for the ease of receiving and withdrawal of capital. Then for fund managers, when you have 5, 6, 7,000 investors, not having an organized database with the percentages, amount, and information of each investor, and then the ability to digitally distribute and returns and capital call first and then distribute returns, hopefully at the end, is if it weren't for that digitized process, it would almost be unfeasible for fund managers to actually accept retail investors into their funds. We see a rapidly growing innovation in the use of AI and data analytics to better understand the behavior of retail investors, better understand their investment objectives, their desired time spans, and desired investment types, and so on. And then we are using these data to work with our partners in the investment fund industry to create products that cater for those requirements. So I believe that fintech is, fintech innovations is still in the beginning, although all of those examples are already today on the ground. And if you look at fintech funding in Saudi Arabia, for example, so we're at 1.5 billion, up 11% from the same time last year. And this amount of capital will certainly fuel further innovation into the sector.
It's an excellent point. I believe with the high focus in the IT spending, strong e-governance infrastructure, and also young population, I echo your point. Definitely, we are ready for innovation. But with that rapid growth, Sultan, what is the risks? Because today, when you do anything online, you are having some, let's say, cyber risks. How do you look at it from that angle?
So I think data is more secure when it's protected under the local cloud. So today, as part of CMA regulation, is that we cannot host our data in a cloud that is not in Saudi Arabia. So this is maybe one example of how to protect our investors. Another is, the cybersecurity requirement in Saudi Arabia is not it's not a matter that is taken easily. And we do have a sophisticated infrastructure in place that enables us to use these advanced cybersecurity technologies to protect our platforms from many cyber hacks. We obviously cannot claim that, cybersecurity that the infrastructure is an unhackable wall. We've seen a lot of issues in recent periods, but we've also seen recent development in the regulation of cybersecurity. So we've seen SAMA announced, more active cybersecurity strategies and so on. So I think technology has to evolve, but still further development needs to be made to make sure that we're protecting our investors and we're also complying with the relevant governance.
If you allow me maybe to add on what Sultan has mentioned. So cybersecurity definitely is a risk on top of the pecking order, if that's the right analogy. But another very important consideration, let's not call it a risk, let's call it a consideration, is basically the financial literacy of whoever is going to invest, of the general population that are either going to invest through a fintech platform or that are either going to invest through a traditional AP or a traditional asset manager. Now, the reason why we're saying this is we believe that financial literacy is the engine that will stimulate the demand that my colleague mentioned. On top of that, it gives the investor the confidence, the knowledge in which to know how to choose which investment vehicle depending on their risk appetite, which investment vehicle depending on their portfolio allocation strategy. Let that be a retail investor with a small portfolio that has to be diversified enough to an institutional or a high net worth individual, and so on. So financial literacy also is a strategic consideration that I believe is on the top of the pecking order as well.
It's an excellent point. Maybe we need to invest in awareness. And,
Absolutely.
Sultan, you have a point?
So I'd like to add to Nasser's point is a lot of these cyber hacks are socially engineered cyber hacks. So that is also something to consider, as, to echo Nasser's point. So financial literacy and awareness in general, we see a lot of, the active campaigns from the relevant authorities not to share your data, not to share your passwords, not to share. So, a big part of this cybersecurity protection is also social engineering, cyber hacks, which requires, as Nasser said, further awareness rather than, technological infrastructure to cyber.
Excellent.
Also requires an investment, right? So from the traditional incumbents or the traditional asset managers to the new incumbents, the financial technology players. So part of your social responsibility type of investment spending should be around awareness, should be around really educating the end consumer. One, to attract them to your platform or to your asset management firm. Two is to basically give back to that overarching society.
I think now we have to talk about awareness. Abdelhadi, I think there is, or do you think there is a misperception in the market, especially among the retail investors, about the performance of the investment funds? And do you think the way they are marketed and managed in Saudi is right?
Okay, so yes, I definitely agree that there is a misperception about the performance of mutual funds. In fact, amongst retail, I think misperception goes sometimes beyond the mutual funds. It goes to any newly introduced financial vehicle. However, talking in particular about the mutual funds, now mutual funds are long-term investment vehicles. These vehicles can come in a single asset class investment or a multi-asset class with different risk profiles and expected returns. Now, I think the biggest misperception is within the equity funds, and typically we see these misperceptions coming from retail clients at the times of market decline, where we get to hear retail clients arguing why the fund manager did not liquidate the fund to limit the decline in the unit share class, and only focusing in a very short-term performance. However, If we look at the long-term investment performance of the mutual fund industry, it is pretty much good. In fact, on average, if we look at the entire mutual fund industry over 3 and 10 and 20 years, we would see that and net of all fees, by the way, the mutual fund industry have delivered 80% returns in 3 years, 187% return in 10 years, and even 744% returns in 20 years. Now, even speaking from a relative to the market point of view, I think the industry have done pretty much well, a very good job in beating the total return benchmarks of the market. So over a period of 3 years, we see on average a 21% outperformance versus the benchmark. I think this is probably attributed to the extra IPO allocation that the funds has been getting in the last few years. However, if we look at as well 10 years, we would see 41% outperformance and even 80% on a 20-year time frame. This is a very good investment performance, and you don't get to see such returns in absolute and on relative in different markets. Now, most importantly, if we look at these returns from a risk-adjusted point of view, I think they're way better than any return that can be achieved through speculation or trading or even investing in a single security. Now, I think maybe the industry did not do a very good job in educating the public about the way they manage these investment funds, their style, their approach, and how they look at things. So the investment management process, and that is in particular correct on the actively managed funds, which is represented by large teams of dedicated professionals, it basically targets to have a basket of the most attractive securities within the market at all times. Now, the very big differentiator between this professional process and people managing their investments personally is that emotions is not there. This is a very disciplined process, takes into consideration fundamental factors that impacts the underlying investment's valuation, and take decisions even to sell at losses when things deteriorate from a fundamental point of view. So I hope to see the industry doing more in educating public towards understanding these vehicles, because these are very good returns that imagine someone investing throughout his career of 20-25 years by placing his savings into mutual funds with the compounding effect that would represent a very good amount of savings upon retirement.
Well-managed vehicle with also risk management and governance. It's not only the performance that stand out, it's also the other thing that stand out for any investor in a long period of time. About the awareness, but in a different angle, Nasser. So when the Saudi Stock Exchange or our capital market was included in the emerging market indices, we see a quite impressive inflow and interest from international fund manager, either passive or active. And this interest, we feel it's even increasing. My question is, they come directly to the market and investing in our listed companies. Do you think that we have done enough in attracting them to our mutual fund industry?
So you're spot on, actually. So the international investment sentiment, or the influx of international inflows, have been growing quite noticeably, especially since we were included in multiple emerging market indices, whether you look at it from an equity capital market perspective or even from a debt capital market perspective. But if you really look at the asset management industry or the funds industry specifically, I think we have done a good job. The number of funds have increased quite dramatically. If you look at it year over year, so Q2 of 2021 all the way to Q2 2022, I think the increase of funds in general, the number was roughly around 60% increase in the number of funds, both publicly and privately, which is in line with the influx that you rightly mentioned, right? But with that being said, I think there's still more to be done. And I think there's a lot of opportunities that our colleagues at the private sector could actually jump on. When an international investor wants to come into the kingdom, They look for ease of access, they look for liquidity, and they look for quality investments, and they even look for transparency when it comes to investments. We believe funds in general, or investment funds, give them the access to these four components. Have we seen it? We've seen some of it. We've seen some of the asset managers actually jump on these opportunities, but yet there are a lot of opportunities to come. I can give you a very simple example. If an asset manager or an international investor that wants to have an exposure when it comes to the banking system, to the banking sector in Saudi, basically now, if he has to do that, he's going to have to allocate it manually.
Sure.
Is there a specific dedicated fund that targets international investors that are looking to invest into the local banking ecosystem? We don't see that. And we believe again, the banking system or the banking sector is one of the most mature sectors in the kingdom. And if there's an international interest, obviously that's going to be on the top of the pecking order of an exposure. So generally speaking, yes, we have took some strides towards achieving our objectives, but we still believe there are a lot of low-hanging fruits that could be grabbed, and colleagues at the private sector could actually benefit from it economically as well.
So mainly you're seeing the issue is also the awareness.
Absolutely. I even second my colleague, Abdul Hadi. Now, what he said, the numbers that he just mentioned are impressive, right? If the numbers are impressive, why isn't the demand coming? Obviously, there's a clear gap. Is it regulations? We don't believe so because, again, impressive numbers, large number of funds, and so on. We truly believe it's an awareness challenge in which we can actually grow, in which both the public and private sector could actually work collectively to increase knowledge, to increase the financial literacy when it comes to the investment sphere in general. And specifically when it comes to also saving, as my colleague mentioned as well, is saving the right instrument? There has to be something very tailored, very specific. Risk tolerance is very low for them to actually believe that this is a saving vehicle as opposed to an investment vehicle. Because we try to really segregate between an investment vehicle and a saving vehicle. Saving obviously is denominated by risk-free assets, by sukuk, government-issued sukuk, and so on. But generally speaking, I couldn't agree more on the importance of awareness when it comes to the fund industry specifically.
Yes.
If I may add, Munira, to what Nasser mentioned, now when it comes to the international investors in the Saudi market, now what we have seen so far is mainly passive investors coming in at once due to an inclusion, and some active investors. However, if you look at the wider active asset managers, you can see that Saudi is still somehow an underweight on average across most of the allocations of the active asset managers within the emerging universe. The market is still new to them. I think valuations were not very supportive as well during the previous times. However, I look at it differently as a potential because once they learn more about the Saudi market and see the vision initiatives materializing, the amount of interest that could come from these active investors is way higher than what we've seen so far, and the impact, because these are active managers, buys and sells in the market, not like the passive, just buy and hold their investments.
That's a very good point. I totally agree. My last question is a common question, and I want to ask each and every one of you about your aspiration for the fund industry in Saudi Arabia. I'll start with you, Nasser.
Our aspirations are extremely high. Our targets, publicly announced, speak for themselves. We truly believe that this is a sector that we will enable and support in the development of the wider asset management industry, and specifically the investment fund industry. If I can use the analogy, because World Cup is around the corner, so the black horse, we believe, us at FSDP, are public investment fund vehicles in which we truly believe it gives the transparency, the liquidity, the ease of access, and so on. So that's truly the black horse that we truly aspire to enable, to stimulate, and support.
Thank you. Abdelhadi?
From my end, I hope to see the industry continuing growing by providing different investment solutions to meet the different investment objectives for a wider investors universe. I would love to see more retail participation and trust in the asset management industry versus trading, and perhaps what could help is incentivizing them not only from a return point of view, but as well from a cost advantage point of view to invest in the industry.
Thank you. Sultan?
I think one is further awareness, working with fund managers to understand the benefit of working with retail investors. So we still see that fund managers have a perception that working with retail investors is going to be a nightmare. But further awareness being made to them that with the use of technology, the experience is rather seamless, is going to allow more retail investors to come and invest into investment funds. We would love to see more goal-oriented funds because those are way more desirable to retail investors. We can see a great example in Malaysia, for example, with their Hajj fund program that attracts, basically, it's one of the most successful funds in the Far East. So goal-oriented funds is something we would love to see more of that meets the desired requirement of retail investors. We'd love to see more fund managers building funds that are more suitable and open for retail investors.
Thank you. Thank you so much, gentlemen. This session has been very rich and insightful. I really appreciate it. Thank you so much. And thank you so much to the audience. يعطيكم العافية.
شكرا جزيلا. نتوجه الآن لاستراحة مدتها 40 دقيقة، وندعوكم لتناول القهوة والوجبات الخفيفة في البهو خارج هذه القاعة. نعود بعدها لاستكمال برنامجنا.
Test. Check one. Check. Check one. Hello. Test. Hello. Hello. Test. Check one. Say. Test. 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 Hello. لا دول ظهروا. Check one. Hello. Check. Test. Check one. Check one. تمام كده صح؟ بسم الله الرحمن الرحيم. تيست تشيك 1. بسم الله الرحمن الرحيم. تشيك 1. تيست تيست. هلو تيست تشيك. هو بيتكلم معاه كده بالطريقه دي. تيست 1. هلو تشيك. ما هي انا مشكلتي كلها ان المايك بعيد. المايك بيبقى لازم بيك. هلو تيست 1. تشيك.
Test one. Test one. Test 1 2 3 4 5. Test. ما لقيت ليش؟ بس منه داير. Test 1. ما هو أنا test 1. Test 1 2 3. Test 1. Test 1. Test 1. أنا بدي أشوف عن بعيد. إذا أنا قاعد هيك أوكي وعم بحكيها أو رجعت عم بحكي هيك، في ناس يمكن تحكي بهالطريقة مش هيك. Test 1. Test 1. Test 1. Test. Test 1 2 3 4.
تيست 1. تشيك.
حضورنا الكرام، نأمل منكم التفضل بالجلوس على مقاعدكم. سنبدأ بعد 5 دقائق من الآن. Ladies and gentlemen, please take your seats. We're starting in 5 minutes from now. السيدات والسادة الكرام، نأمل منكم سرعة التفضل بالجلوس على مقاعدكم. سنبدأ الآن. Ladies and gentlemen, please take your seats now. We are starting.
هنا يمتزج العلم والتخصص بالشغف. نبحث، نقرأ، نتحاور بصوت عال، لأن التفكير المشترك أسرع الطرق نحو النجاح. سعي حثيث، جهود مترادفة تحقيقا لمستهدفات برنامج تطوير القطاع المالي أحد برامج رؤية المملكة 2030 الطموحة. بالعزم نجتاز العقبات وبالعمل نحقق المنجزات، هادفين لرؤية مستقبل مشرق مليء بالفرص الواعدة. سوق أدوات الدين انتعاش يشهده الوطن في كافة معدلات النمو، وإشادات دولية تبرز الإدارة الحصينة للدين بفضل جهود القيادة الحكيمة وزخم أعمال التطوير المستمرة على كافة الأصعدة. في ظل التقلبات والدورات الاقتصادية العالمية تغدو الحاجة ملحة لاستكمال تطوير سوق الدين المحلي وتنويع قاعدة المستثمرين فيه، وتعميق سوق أدوات الدين كمحرك للنمو الاقتصادي وتطوير بنيته التحتية، بما يجعل من بيئته مصدر جذب للمستثمر المحلي والدولي، جانبية تعززها استراتيجية وخطط التطوير المستمرة. خطوات حثيثة لمستقبل واعد.
السيدات والسادة الكرام، نبدأ الآن الجلسة الحوارية الثالثة. سوق أدوات الدين محرك للنمو الاقتصادي. رحبوا بمدير الجلسة الأستاذ عبد الله سعيدان، شريك شركة ماكنزي الاستشارية.
Assalamu alaikum. I'm Abdullah Saidan, and it's my distinct pleasure to be here with everyone today. I think in this third session, we'll move to the debt side of the financial sector, where we'd love to discuss debt capital markets as an engine to growth of our economy. This is relevant for the public sector with the massive investments we see across different sectors, but also for the private sector, which wants to tap into a lot of these opportunities and would likely want to look at debt as a key source for financing such investments. To do so well, I would love to have some panelists that are also experts in this field and that would help us have the right conversation around it. So please join me in welcoming Mr. Hani Al-Mdaini from the National Debt Management Center. Please, Saad Hani. Mr. Jamal Baghiba from BNP Paribas, and Mr. Mazen Baghdadi from Al-Inma Investment Company. Welcome, gentlemen. Great to have you with us today. And I look forward to having this conversation with you and with our esteemed guests. Maybe let's start with a global view. The changes that are happening globally on cost of capital and interest rates definitely would affect directly capital markets and how investors and issuers look at this in general. Maybe we'll start with you, Hani. How do you view these changes, not only in the region, but globally in different regions as well?
So, first of all, thank you very much. It's my pleasure and honor actually to be here with you and my colleagues, Jamal and Mazen. Definitely the DCM market, let's put it this way, the DCM market is a main funding channel when it comes to growth. When we talk about at sovereign level, when we talk about the national economic growth, or at the private sector, when we talk about the corporate growth as well. Over the past 2 decades, or let me say 15 years, the access to the DCM was extremely feasible, suitable, and stable as well.
Yeah.
2 reasons: high liquidity, low interest rates, and thanks to the quantitative easing executed by a number of central banks globally. Is it the case today? Absolutely not. Now the environment has changed dramatically when it comes to signs of recession, rising interest rates, etc., which definitely impacts, this is fact, impact the DCM markets. We are witnessing today a 50% drop year on year, or actually more than 50% drop year on year, in senior issuances, which reflects the global impacts on the DCM market. I mean, previously, not only from the borrower perspective, but also from the investor perspective, the stable interest rate, albeit low, but at least stable, provides comfort, access to the investors. At the Kingdom, when we talk about the sovereign debt and the debt portfolio itself, I always receive the question, what are you going to do with the rising interest rate? And our answer is always not what we're going to do, it's actually what we have done, not today, not yesterday, but over the past 5 years. When we talk about managing interest rate outlook, managing the refinancing risk, our average term maturity in the debt portfolio is exceeding 9 years, for instance, which is at the high side of the comparables. At the same time, the fixed portion of the debt portfolio exceeds 85%. All of these indicate that we need to refinance our debt portfolio actually in a percentage of less than 10% only every year. What does this mean? It means that I will take 3 to 5 years if we assume the rise of interest rate for the, not to refinance the whole portfolio, but the majority of the portfolio, which makes us in a very strong position in terms of the debt portfolio characteristics.
Very good. Jamal, how do you view this across different geographies as well, across your different clients at BNP?
Yes, thank you for having me on this panel. It's a pleasure for me to be here. As Hani said, we shifted from a model for the past 20 years where it was low interest rates with no real view of having any hike, and more or less from a day to another on a world where interest rates are way higher, forward curve or down, and opportunities to go on the market are more sporadic than what it used to be on the past, let's say, 10 to 15 years. So having a well-known institution, well-known program, a well-prepared market is key to access to this, to the debt market now, even more than what it used to be, specifically for that reason.
Imagine from a company's or corporate issuance perspective, this must be a bit of an alarm bell, if you will. How do they view this with their growth plans that might have started also with some other vision, linked to other vision programs?
Having me. I think the vision has covered, Vision 2030 has covered a lot of sectors. One of them are we can see the financial development sector program, where the banks and financial institutions will play a very important role to finance this project. We are in a challenging environment of Cyber is 3 months around 5.3%, expecting to have another hike end of this year. However, I believe there are some sectors where the Vision 2030 has have some clear targets for it. I believe energy projects, infrastructure, healthcare, quality of life, tourism, fintechs in general, all this has really great prospects from our forecast, and it can, to be honest, live smoothly with this current interest rate environment. Also, I would mention the 3 types of financing where these projects can be financed. The first is through financial institution where the direct financing comes. Secondly is the DCM where we are today talking about. I believe in this environment some elements has to be addressed clearly, like for example the maturities, the returns, the debt size, where these all debt size, they also the debt usage of that projects, where we can see it for listed companies in prospectus or in data rooms, where the investor can have the real comfort to invest with this current environment. Also, I would say the giga projects we're also having today, Qiddiya, Neom, Red Sea, all this can a very good source, and DCM will play a very important role here.
Jamal, I want to go a bit back to how different regions and the effect of interest rates differs for investors in different regions. How do you see the different global regions or even specific geographies or economies getting affected? And does that reflect on the level of interest in investing in Saudi, given comparably the environment here is better than some of the larger economies?
So for me, there is different elements that impact the attractivity of the local market here. Interest rate is one, but more importantly is the underlying economy that we have in the region, plus the visibility and the marketing that is done about the region worldwide. Yeah. We saw that on recent liability management when you managed recent issuance with PIF. The marketing work that has been done to reach out to the global investors was key. And I think we'll come back to that a bit later, but for me, this is one of the key elements to increase the understanding from global investors to what is really happening in the region. This is one of the key focus for the future.
Hani, you mentioned what we have done over the last 5 years, not what we're going to do. If you don't mind, what have we done over the last 5 years since 2016, 17, and how does that guide the next couple of years moving forward in more turbulent macro environment as well?
And when we mentioned the last 5 years, we were talking about the interest rate and refinancing exposure. However, this is not the only efforts that have been made and bear the fruit. Currently, number of initiatives actually I wanted to highlight in the domestic market by the government, represented by the key stakeholders when it comes to the DCM development domestically, whereby the Capital Market Authority definitely is a key player, the Central Bank as well the Ministry of Finance and the National Debt Management Center. Before 2017, the main theme was five conventional banks represent the investor base in the domestic market, which is absolutely something that we had to work on. So it started by establishing the Sukuk program in 2017. This basically means to expand the investor base from 5 conventional banks to unlimited number of potential investors actually that seek Sharia compliance products. So this is number one. Number two, the establishment of the primary dealer program domestically, whereby 5 local banks joined us, providing the support, the expertise in developing the domestic market. Number of initiatives have been made as per their views and requirements, which was extremely crucial actually for the development. The extension of the curve as well to 30 years. This also helped not only the DCM and our focus here, but also the housing sector, which uses the government curve as a benchmark to price mortgages, etc. The denomination as well, which has been reduced from 100,000 for the Sukuk to 1,000. This enabled the mutual funds to market it in a more suitable manner for their individuals. The settlements, international clearing, and thanks to the CMA and Tadawul for their efforts in that regard as well. All of these initiatives resulted in massive increase in the secondary market turnover, which bear the fruit. In 2020, for instance, the increase was close to 700%, although that we are starting from a very low base. However, we have seen the stable actually growth in 2021, and definitely for 2022, given all the circumstances, there is a slight drop, but at least there is this demand in the secondary market. Are we saying that the journey is over? Absolutely not. We're still working. And maybe the recent initiative by announcing 5 international banks as international primary dealer will create additional space and scope for further development and accessibility for the international investors.
And so you mentioned high growth from a low base. How do you see the overall debt capital market, the local debt capital market over the next couple of years as well?
I mean, if we compare it with the 90s or even a decade or a couple of decades, there was only the government as an issuer in the domestic market. Today, the case is absolutely different. When we talk about the public sector, number of issuers that are active, whether domestically or internationally, they allow me, I will mention some names. For instance, Saudi Finance, for example, company, Aramco, PIF, etc. And their existence to support the development. Not to mention that, but also number of private sector entities, whether in the banking, energy, that are active in the DCM. Actually, this week, as we speak, we are almost talking about 3 issuances, one in the international, 2 in the domestic. Today, we are closing an auction, for instance. The demand is close to 10 billion riyal for the government, not to mention the private sector as well, with the banking sector as well. We are seeing a demand exceeding the 10 billion. This all reflects that there is massive growth in the domestic market.
I'd like to move to you, Mazen. First, a lot of these changes that we heard also are from the public sector. So how did the private sector also view that from the other vantage point? And how do you see the change in issuers, as Hani started alluding to?
And I believe, as we can see from private sectors, the demand is very high. We can see in a couple of, as Hani said, how many issuance, let's say, for example, in 2022. However, there are some initiatives, let's say, from our perspectives, from our view, that it should be always considered the increased number of participants through allowing, let's say, retail more, and we can see that happening a couple of issuance. Also, I would say the size of issuance, because and size of issuance and how frequent we can do the market, because the market has special liquidity constraints sometimes. We can see interest rate at 6%. Again, it's a bit challenging for corporates to go through a DCM program without a clear vision or clear expansion. What's the return on investment on that? So from our corporate point of view, we see a lot of demands. However, we should be a bit careful in issuing these debts. As also my colleague said, I believe doing it in a Sharia structure, this is a very good to allow more and more, either retail and institutional. We are, as an investment banker, also do a lot of capital restructuring for these corporates to either go to direct financing from banks, or obviously we can also the debt capital market, whereas we can do a full capital structure for the companies and do, or act as a financial advisor for right issue, for example, as a way of also financing for future projects, and we act as a financial advisor or an underwriter as well.
Jamal, maybe I'll move to you. I'll ask you to double hat a little bit. With increased also issuances from corporate, with the loans that the banks are giving out also, that leads to a higher loan to deposit ratios. However, with still the massive push to investment and to growth, how do you view debt capital or debt issuance as a source of financing to cover what corporates need in the next couple of years?
The tendency is very clear, and it's an overall tendency. It will shift from pure banking to capital markets. And it will have to shift, not because of a choice from the bank, but more because of the increased level of regulation and increased level of capital than the different regulators are asking for the banks. Basel III and Basel IV now is a very good example of it. So the cost for the banks to use their capital to directly finance this sort of corporate is becoming increasingly high. And for the corporate, it will be more efficient to have a proper DCM market than work by itself, using the bank's facility on special needs, probably to do some bridge between like a market to another, or to reach some debt on a very short period of time, but with the intention to go to the market after. But this is where we see the tendency on this market. And it's not only regional, it's global.
Mazen, is that easy to do for corporates? How easy are your clients telling you to get their debt instruments, or to actually issue this debt? Is it easy to get access or awareness to the right investors, retail or otherwise? And is the process also easy and smooth to do? Is it a real option, in other words?
I believe it's a good option. However, our retail base still has a lot to educate them about these debt instruments and how it can be helpful for them at some point of time. However, from corporate side, we can see yes, a lot of potential and growth in terms of number of companies applying for these debts, and we can see يعني, with the support طبعا of Capital Market Authority and their collaboration with us in easing also these types of debts. And I would mention also listing some Saudi companies in the stock market. This will give a very good access for them for debt. And this also with صراحة support of the Capital Market Authority in easing more and more the regulation and the length to be listed in the Saudi stock market, where the company can really it will be much easier for them to issue sukuk or to go through DCM in general.
Jamal, for international investors, is it also easy to access local debt capital markets, or is it a little bit more complicated compared to other markets? I think the comparison here is important, not the absolute ease.
Yeah, so for me, there is two things. A, the access to the market, which is relatively easy, but the problem or the main issues for the international investors is all the environment that is necessary for them to diversify their portfolio. Access to the NDMC debt, for example, is quite easy, as we described before. The work has been done for years and years on the education from the global investors to have access to this market. But when you want to go down in terms of rating and in terms of quality of risk, then you will target, it's a bit more difficult, and a lot of effort needs to be made on the marketing, on the explanation of this instrument from the international investors' point of view. But one of the main blocking points or hurdle, if I may, is the liquidity on the derivative market.
Okay.
The OTC market is very important, because if you put yourself in the shoes of a global investor based, I don't know, in the US, in Europe, his point will be to access to the local market, but his benchmark will be against dollar LIBOR, Euro SOFR.
Yeah.
So you will need to think about accessing to the debt, but also accessing to the local derivative markets,
okay,
to have local debt, but translated into a euro rate or a dollar rate. And this market, the basis and the cross-currency, the liquidity is progressing a lot, but is still not enough to have these players being fully confident on that part.
Hani, do you agree? What kind of your top priorities for the next couple of years would be?
I cannot disagree with them. So this is number one. Number two, the top priorities, I mean, for us, everything is a priority if we want to develop this market. However, we need to focus on two simple spectrums. One, expanding the investor base. Two, expanding the issuer base.
Okay.
So this is straightforward. Now, how we do it, of course, this is something also is being taken very seriously under the FSDP, or the Financial Sector Development Program. There is a dedicated, actually, committee that looks after the development of the local capital market, chaired by His Excellency the Chair of the CMA, membership from the NDMC, SAMA, FSDP, and all the relevant parties. The main focus for this committee is to look after the initiatives that will impact positively on the DCM. So, for example, in the settlements, we have seen the international clearing. In the infrastructure, we have seen the reduction in cost transaction. We have seen the repo infrastructure that has been done. And the accessibility also, Jamal mentioned, we are seeing the international primary dealers that will create a suitable channel for an investor who sits away from the kingdom to access directly to the local market. All of these initiatives definitely will provide positive momentum to our local debt market.
So, Jamal, tafadhal.
Just to re-emphasize, this is a a common effort, and I can testify all the work that has been done, and that is still going on that side. From your side, of course, but from the bank when you choose to be a primary dealership in the country as well.
Yeah, looking forward.
Mazen, we heard derivatives, secondary markets. We heard a lot about infrastructure. What is the local private sector thinking about top priorities? Do you converge and you're just hoping for it to be accelerated, or there are other things top of mind for you?
Well, let's talk about a little bit about our asset management business and how can we also be an important player and have a great role in the DCM market. For example, in Alinma Investment, we had established an ETF Sukuk fund for government Sukuk. Also, I can see the market is hungry for this asset class as creating a vehicle or a mutual fund, such as a Sukuk fund or a bond fund. I believe this is a very important in supporting and increasing the customer base through mutual funds, where the fund manager has the ability and the decision maker to invest in certain Sukuk with different credit rating risks as a fund manager. Also, I would mention today, as an asset management business, we manage a lot in the multi-assets portfolio in local market. And I believe one of the asset classes which have really the good potential for the next upcoming years is the DCM, to diversify from equity, because as you are aware, our market usually talk about two asset classes locally, real estate, equity for the last 40, 50 years. Adding such an asset class, I believe, will enhance return and will fit to some investor who doesn't take much greater risk through multi-assets portfolio, which we can see a lot of demand coming and a lot of liquidity coming to investment companies and we are seeing that this demand is very growing.
I'd like to just push a little bit more on that point. At least in theory, the growing number of listed companies would institute a broader base of potential issuers of debt. Do you view this? Do you agree with this, or do you see that this theory is actually challenged, and only the corporates or larger companies would actually resort to issuing going through this financing?
No, I believe there is a very much potential growth here, and we can see it through the number of listing in TASI today, as well as Numu market. We can see a lot of listing in Numu market, where also it can, let's say, start the DCM trip through listing in Numu or TASI. But we see this is a very good potential, and actually one of the, let's say, regulatory accepted way to go to DCM is through listing through Numu or TASI.
Fair. I'd like to go to maybe the human side of this. A lot of we talk about it from a market perspective. It's clear the path is there. This is a real option for financing. But a lot of shareholders, potentially some board members also, might have a negative connotation to issuing debt. It might affect our credit rating if we want to access other loans later. Jamal, how do you view this? How real or deep is it? And what can be done to also help comfort some of these worries?
So this is definitely a wrong view, because the more you will have bonds than trades and than are liquid, the more any potential new investors will have some data points to analyze before he goes into the market and he goes into your own debt. So the way of thinking should be on the other way around. Yeah. And again, due to the constraint that is increasingly high and just going up and up on the bank's balance sheet, the arbitrage between the DCM and the bank loan book will more and more shift in favor on the DCM market for this principal reason.
Mazen, do we need to add incentives, also financial or non-financial, to companies to engage more? What's your view and what's your...
Definitely, but I would say, as let's say, to answer the previous question also, or to add some, as a board member in the company, I should put myself as an investor also. Is it feasible to do this issuance at this economy, at this interest rate levels, or no? Is the feasibility for the project from profitability ratios? Because this could affect the capital structure of the company, and this will lead to affecting the financial and profitability ratios for the companies. And this will, let's say, if the project wasn't on time, or let's say there is hikes in the feedstock for some companies, this will affect really the decision making in going through DCM.
So I want to touch on incentives for sure. What's your view on that, Mazen? If you or your companies, as you're a board member of your clients, are waiting for that final nudge, it could be financial, it could be non-financial incentive, or is that not really a discussion that...
incentive for?
For actually exploring or issuing debt as a way of financing rather than more typical ways?
I believe yes, but it has to take some time and structure for that.
Clear. Jamal, you wanted to add to that?
To add one element on another good reason to diversify the source of funding. Being reliant on just one source of funding from the bank is obviously not good, but one of the main reasons is that what happened with the regulation of the bank may, at a time of a refinancing, may make the bank not a good option for a company to go to this market. And if that company doesn't have any bonds trading on the market, being forced to do an inaugural to replace a facility that won't be renewed from a bank, it will be a very hard exercise, and we'll probably have to pay a premium. So having all sorts of investors aware about our name, already pitched, already aware of the marketing of the name, is really important also in a way of diversifying the source of funding.
I think that's fair. Hani, Jamal mentioned a secondary market. Any news, any updates we can share with the group today? Well, not yet, and we have to wait for some of the initiatives you mentioned.
I'm sure, Jamal.
Go ahead.
Actually, for me at least, I always prefer to have official announcements.
Fair.
Than.
Fair. I'd like to move us, maybe I'd be remiss not to talk about ESG, especially on the heels of COP27. When you look at different reports of not only green bonds, but sustainability-linked issuances, loans or bond in general, we see massive growth from roughly $240 billion in 2017 to more than 1.6 trillion last year. How do you view this growth continuation? Maybe Jamal, as you see across different countries, do you see it? Obviously, the lower base allowed us for a big jump over the last couple of years. How do you see also markets reacting to it and embracing it across different regions?
Thank you. The demand from investors has grown a lot, but we think that it will accelerate even more. Why? Because the asset managers there is a lack of offer compared to the demand of assets available to invest in. And so this is one of the main reasons why we think that this market will develop even more. Will it be a bit more regulated? Will it be a bit more clear for investors? Yes, of course, and it needs to be. But the tendency is there, and we don't see any point of going back anytime soon.
One way to make sure this clarity or transparency is available for investors is how do we think about ratings and highlighting what is really working and what is really actually affecting the ESG positively, either the E or the S or the G. What is NDMC contributing to to the rating and transparency side of things.
Very clear, and it's very important question actually for the ESG. It's a new trend, and definitely that is taken extremely seriously by the FSDP as well. So there are a number of initiatives related to the FSDP or related to the ESG under the FSDP, where the owner for those initiatives is the NDMC. And I can talk here about two tracks, if you allow. First one is related to the data transparency, as you have mentioned. So what is the simple idea is that the vision in 2030 is a showcase for the Kingdom's commitment toward the sustainability. And we just need to showcase that position to the investors. Number of initiatives under the Vision 2030 by nature is designed to serve the ESG file. I will take some random initiatives, one of which, for instance, if we talk about the E-sector, we can think about the renewable targets for 2030, which is related to the energy mix within the kingdom to be 50% renewable. We can talk about what has been announced recently by the government, specifically Ministry of Energy, related to the net zero carbon emission by 2060. All of these are showcases. We just need to link the dots. Under the S, for instance, the scholarship programs, the female participation in as the workforce, which unlock additional potential GDP growth, which are witnessed as we speak, even in 2020 pre-budget statement, which has been announced more than 8%. So for instance, the female participation as a target for 2030 was designed to be 30%.
Which we've achieved.
Today we are 34%. Thank you very much. Now all of these needs just to be presented in a well-written story for the investor under the ESG umbrella, which is something that is undertaken under the FSDP program and will be launched very, very soon. The second track is the green bonds and green issuances, if you allow me to jump there. Now, our view is not that we need to access the green bonds market for the sake of accessing. Yes, exactly. It is, again, to showcase the kingdom's commitment. We have, for instance, announced last year, end of last year, hiring of number of international banks to help and support us in structuring the green framework. We have reached into very advanced stage as we speak, and it will be announced very, very soon for that framework in due manner.
I think, Jamal, is that enough from an international investor side? We know the vision story, we live it, we see it. What is enough? What's the bar for an international investor?
There is, as you perfectly described, there is enough offers that can be covered under the ESG format. From my point of view, what is the point where we need, it's a collective effort that needs to be addressed, is all the education and marketing about that into the international investors. And we saw that last summer with the roadshow on PIF, and that was the prelude of the ESG inaugural bonds. The level of education of international investors about where the Vision 2030 is probably not, there is a gap between the international vision, the international understanding, and what is the actual vision here. So this is some marketing efforts, and it's a collective effort, I think, between all the persons around this table and in this room.
Very good. I'd like to thank you all for this engaging conversation. Covered challenges, growth, as well as link to the future through ESG. Shukran lak. Thank you very much, Hani. Thank you, Jamal, and thank you, Mazen. يعطيكم العافية. Please join me in thanking our panelists. يعطيكم العافية. شكرا جزيلا. يعطيك العافية. شكرا.
شكرا جزيلا. والآن نبدأ الجلسة الحوارية الرابعة، تطورات سوق الدين المحلي. رحبوا بمديرة الجلسة الأستاذة سارة الخليوي، مدير أسواق سوق المال Standard Chartered.
Our dear attendees, Assalamu alaikum. I would like on behalf of you to extend my thanks to the efforts the organizers that will highlight an important issue, which is debt. It will be a need for the economic advantages and the reality shows that challenge not in the debts itself but on how to manage debts effectively to achieve its goals. So the kingdom because of thanks to Vision 2030 did a great work to develop the local debt markets that affect the sovereign debt markets regardless of all the challenges that the international markets gone through. So the local debt markets has witnessed many transformation last 5 years, which is listing the debt in 2018 valued by Real, and also hiring with the financial sector. This development reflected with the Sukuk markets monthly, and also enhancing the secondary market. These developments about this issue, our meeting today about the development of the local debt market, and we will host a number of experts regarding this issue. Muhammad Mufti, the chief of portfolio market, and Yazid, the managing director of Bank of America, and Abdulaziz Sayari, founder of Sukuk Capital. So welcome everyone. We'll start with our first question. We're going to talk about the local debt market in GCC and in Kingdom. Mr. Mohanad, we know that the local debt market in Saudi Arabia is still in an advanced stage away from the GCC countries, but we are still developing. What is the reason of the local debt market and its slowness? Thank you for hosting me. Let's start with a story. The debt in last 20 years. First, the instrument, most of them are private for the qualified or sophisticated investors. But in 2016, the kingdom has the first international issue, and we also promise our investors that we'll develop the local market. And then the story of development started in 2017, as you mentioned, by listing the local Sukuk program, and took levels which is listing it in TASI to deepen the market, and also hiring the first banks which are qualified to sell and buy these issuance in the secondary market, and also to lower the nominal value for and finally to link with your clear platform and also clear state. At the same time, we work in parallel to enhance the local market and also expand the investor base. As Hani said, we work on the green framework, which is an important financial channel. Mr. Yazid, what do you think about Mr. Atani? Thank you for hosting me, and also I would like to thank our guests for their attendance. So I think the reason, the easiest way to answer why we are late, because there wasn't a strong need for the debt in regard of corporates, because we have a robust banking system available before, and this reflects the equity that we have here in the country. But if I am a corporate, mid-sized corporate, and it's easy for me to resort to the manager in some of the banks to take a letter of credit or facility, and also that I have the funds I needed in a matter of 2 days instead of uh, hire lawyers and financial advisors and also bring a process and everything. So this could take time and also the cost and other among others. If there is a banking system available that could develop, and today we have a major competition in prices in some of the banks for financing that we have seen in the recent years. So there wasn't a need actually, but the development we have seen in last 10 years is a great thing that if we're talking about bonds, the Saudi bonds, whether the international or that in Riyal, Saudi Riyal. Before 10, 15 years, there wasn't available. Me and Iman, we were working back then in the debt capital market, and we didn't see issuance from Saudi Arabia, and we always ask why we don't have issuance, because there wasn't a need. But even though we've seen infrastructure and we have seen initiative from CMA and also from the central bank, and we are witnessing a major development, and we are still in the development, and we are very positive. Thank you for hosting me. I think that one of the reason of the late growth in GCC markets refer to the investors base that always centralized on banks, and as they said, banks have high equity, and these were one of the reason. And if we have seen the investor base in the kingdom, it's different. But in GCC, after all, there is a shortage in the investor base in insurance companies and pension funds. So this is one of the reasons of what if we are late, and also the mindset of investment that always centralized on real estate and also stocks. But I think that with the increasing of interest rate, I think that the asset class will be more attractive going forward for local investors. And now we refer to the kingdom, and the development happens in the kingdom for last years. Part of it is the economic development, and this requires, of course, the development of the local domestic capital market, and also and all the efforts that done by the CMA regarding the infrastructure, and also increasing the investors base and so on. My question is for Yazid Iman, from international bank in perspective. We know that Saudi Arabia is a frequent issuers in local market, but we don't see financial corporates issuing in the size that we would that we hope for. So why? What is the reason, in your opinion? I think the main reason, which is the equity, the bank equity, because there is no need for resorting to the capital market or the debt market, and also the currency as well, because me as issuer, I can think between local or international, and international, of course. It's more liquid, more established, and offers the ability to issue in longer term. But this is one of the reasons. But if we have seen this year, you would see that there is a major increase. Yes, it's centralized on banks and also in one of the instruments. But I think this is a good sign to show that the market is starting to develop. Yes, I agree with Iman on her answer, and also I'd like to add that the major companies that do not need the deep it's not enough to issue in real. But when we're talking about major corporates, the international corporates, for example, SABIC, Marahi, Electricity, Aqua Power, these companies that has need hard currency needs in dollars, so they won't take its needs from the central bank, of course. So they resort to issue international bonds, and all of them have a credit rating. But I think the local market is enough for the small mid-sized companies and small companies. I think the equity is enough, and we have the infrastructure here to for the small and mid-sized companies. But as Mr. Iman said that, and we talk about this in the previous meeting, that this needs development, and also the awareness of the investor himself. This is why I'm glad to have Abdulaziz that will talk about this issue in more details. So now we'll go back to Mr. Mohannad. We know that the increasing prices for oil prices. So what is the goal of the debt issuance currently? We have two references to refer to. The first one, which is the debt strategy midterm that form the portfolio of that based on studies and figures that have limitations and risk, and this portfolio will manage in this frame of this risk. And also the second reference that issued by the center in the first quarter of each year in 2022, we talk about three things. The first is that we refinance the debt, the debt asset, which is 3 billion, and also financing the infrastructure that could enhance the economic growth. And also we succeed in this to finance some of the infrastructure projects in water sector. And also the third thing, which is to enroll in the process, the pre-financing process and refinancing to manage the risk management. So this is how we plan, and this is what has been done in this year. So now we'll go to the investor, Mr. Abdulaziz. Because of your experience in Sukuk Capital, what are the most enablers to list these Sukuk and bonds and the mid-size companies? So in the beginning, if we want to talk about the enablers that for listing the bonds in the last time, were two parts. The first one, legally, what happens in regard of development in the system of corporate law, and also Ministry of Commerce law, and also the facility and also the investment funds are not objected to the law of Ministry of Commerce. And then 2017 we have the regulations for companies from CMA, and at that time when it appeared, the size of or the market did not digest these rules to be apply or to apply the debt capital. And also the idea behind it is that the companies cannot have this debt mark only for the contributing companies, whether public or private. But in 2021 in January there is a update on the regulation to allow the companies with a limited responsibility, which is allow them to list to offer the debt capital, which is very limited in the market. Some of these companies, unlike the other companies, and we add the CMA allow with the fintech lab and for the companies to organize issuing the debt capital for mid-size companies, which help them to reach or access to the debt markets as additional source of funding for these companies and facilities. So all of these developments legally and in regulation perspective. In other hand, the technical perspective, the technical development we see with the Abshir system in the last period with the Ministry of Justice laws, and we are more the more sophisticated companies in regards of the digital government with the digital data, which help majorly to have to facilitate the KYC, which help to the investors, the individual investors, to enroll, to invest in a way, in a technical way, and also one of the important things that happens recently, that the percentage of those who went who went to stocks and through technical channels are more than 85%, and to have these technological channels help to develop the capital market, especially for mid-sized companies. And regarding of the investors, does the kingdom suffer from having for the lack of the demand from investors on the issuance that valued by Saudi Riyal, and how do we encourage them? So the number of coverage in our local issuance, 150% from local investors, which resulted that 60% of the financial needs are from the financial financing. So the work that has been done 5 years ago, it's good if we compare it with other countries that took contracts until they reach what we have reached now. And the reason behind this that we hire 5 international banks to for the as your banks, you and Iman. So are we done? No. We see that this is the beginning of development for 2 things, which is to shift your international expertise to the local market, and we see that that will shorten the period to development, and also which is the main goal that we always seek for, that how can we make the kingdom or the safest resort for the regional and international investment valued by Riyal. So my question is, Iman, that we all know that the international investor want to participate in developing market like Asia, but we didn't see that number from international investor to invest in the local currency here in Saudi Arabia, although that Saudi Riyals is practically a dollar, and also we can do it through a clear stream, but even so that we don't see a foreign investor for the local bonds valued by Riyal. Why do you think? I think that we have 2 types of investors: the passive investors and active investors. The passive investor, they depend on indicators for the local the local market, like JP Morgan index, and also so on. I think that the sovereign bonds are not in these indicators, and I think that if this is a change, we will see passive monies and passive flows in the market. So this is in regard of passive investor. In regard of active investor, they do not depend on on indicators, but they depend on the equity and the returns. And a lot of active investors are current investors in the dollar bond for the government. So for them, when they compare it with the return and the equity, the dollar bond, the return is high and the equity is still higher as well. And these are the two main reasons of why we don't have flows in the local market. And also, to put it in context, we should take into consideration what happens globally for rising interest rate, and this, of course, affecting the investor climate as well. So we are saying that passive investor will be able to participate if this is in GDP, and we also know the rate almost, if we are able to quantify the question. It depends actually on the weight in the index. So Mr. Yazid, to cope with the growth in Saudi Arabia. So do you think that it's enough to issue in the local currency, or we need that to issue in American dollar as well to cover the needs of finance? I will divide my answer into two, and there is yes and no. It depends on who is the beneficiary. As we said, that the major corporates is not enough. The local issuance is not enough for them, but for the mid-sized companies, I think the market has enough deep or enough depth for them. And also, I imagine that the issuance of bonds from the Ministry of Finance that today that they are going today with a lot of developments in a local primary dealership in 2018, last years when the initiative started. So this thing, when it's developed mostly and will be more established, here we can see the shift for the smaller companies. But now, if the small companies are not in need, then it's difficult for them to issue with a foreign currency. So I think the local market is enough, and also the bank market is enough. And we'll talk about the previous point, which is the passive investors. And they have, as Mr. Iman said, that they have a criteria, which is automated. It's not, and they have a criteria and the maturity, and of course there is a threshold in pricing, and this pricing will be compared to the existing benchmark. And because of the fundamental, if we compare the issuance, the Saudi Arabia with the dollar, with the issuance with the real, there will be disparity, of course. And this is a fundamental reason, because they are using discount rate with the cyber, which is a very important, and this will cause some of the disparity. And also with the awareness of the investor, and also to increasing the international investors. And we see it right now, and day by day. And some of the international funds with the local currency funds, the international, whether for BlackRock and so on, they are questioning and they are showing more interest. And this feedback, we pass it to the NDMC, and we are hoping to see this initiative to be developed. So let's talk about the local investors, Mr. Abdulaziz. We know that the center of managing the public debt, so that basically to attract the individual investor, but we're not seeing that much of attraction from the investors, individual investor. Is the idea because of the trade in electronic channels is complicated? Do we expect that if we facilitate the process or we increase the awareness for the individual investor, we'll see different results on the market? In the beginning, when we see the behavior of individual investor, which is a behavior that it's not investment behavior that we see in the stock market, and we can see it in the Saudi stock market that they are not investor. They are looking to make quick deals because they lack the awareness of the culture of saving and investment, and also the other point that the office of general debt recently that to reduce the value of bond to 1,000 real. Yes, it happens, but what have we seen? That there is no accessibility to buy these bonds. So when we are talking, for example, Rajhi Bank, when they offer bonds, it has covered 11 billion, which is more than the required size that they want, which is 4 billion. So here we're talking, and this demand, most of it came because of the accessibility and also the marketing for the investment opportunity, in addition to the credibility of the banks, Rajhi Bank. So when we see that what they like, let's see, the bonds or Saudi bonds offered, which is the accessibility, and also the accessibility in general. And as we have said, that 85% from those subscribers from the electronic channels, if we have electronic channel through the fintech companies or through banks, we think that, or I think that we'll see more subscription on the Saudi public bonds. So the reason of success for Rajhi bonds is because of the heavy marketing, although of the some of the difficulty for online form. So the credibility of the name and also the marketing. Is this the idea behind it? Why the raising awareness of why we have should invest and save? As we have seen, the marketing for Rajhi bonds was very huge, and in a lot of people save his money. So here in Saudi Arabia, or Rajhi Bank, the size of accounts reached to 94%. Maybe this is old info, but this is the last I have seen. So this is shows that we have these amounts of money that can be put or used with a certain return to save from inflation, and also the investment in the Saudi public bonds. We have a lot of money that are not invested. So when we have major awareness and major marketing on low risk bonds with a higher return, maybe inflation that not in these in the present time, but will have a return in above the interest rate and inflation in normal days, and not the current days. So when we market it this way, I think that there will have a lot of individual investors will also apply for the Saudi bonds, and also the liquidity. If we have high liquidity for Saudi public bonds and also to the exit from this bonds as well. All of this will contribute to buy them. I think if we want to brief what Abdulaziz said, which is the easiness of access, so now individual can subscribe through the private channel, but I agree with you that there is some difficulty in logging in and logging out. The process could be complicated, and if it's not easy, so I agree with you, and so in regard to raising awareness on saving and also the awareness of investment and saving, which is important thing, and the easiness. I must go on the platform, and when I click I can buy and sell, but now it's more complicated, so it's a complicated process, which the platform and the infrastructure is there, and with the Rajhi Bank is considered as an important bank, and they did the unconventional marketing for this issuance, but also we're talking about the awareness of the investor, which is the basic thing, as we talked before in a previous meeting, that the Saudi investor, when they're thinking about saving, they're thinking about stocks and maybe real estate. So it's important that the mindset of investor think of a product which is low risk, and also there must increase the awareness for the investor or the retail investor especially, and we see this that Rajhi bond was one of the experiences. Thank you, Yazid. I need to ask you one final question. We all know that ESG is an international phenomena. What is the role that the ESG can do in the Saudi local market, and do you see that they should increase initiative in ESG to aware people? I need to know your opinion in the local market. Thank you. Good question. And we're talking about ESG. This always and the nucleus of the place, and also as we have seen last year, the Middle East initiative and Saudi Green initiative, we have seen the green framework and also in PIF, and also with the issuance of PIF before a couple of weeks, which is the first issuance of 100 years from a sovereign fund. So these initiatives and all of these scopes is there in the country from Nucleus, and also we're still in early stages to have effect on the issuance of local market, and also the main reason for this is the quality of investors. So the investors who are the issuance of the green issuance international are funds, specific funds from passive investors, and also they have the specific criteria and invest in something green and with the carbon emissions, and also the quality of these investors are not currently not available currently, and I think that they will be there organically. So we're a dedicated investor like Rockwell. They have two sorts of funds. One of them is green dedicated. So now we think that in Saudi Arabia we have the same idea. If we see the international order books now, we'll see that a lot of those investors are green funds only, whether if it's Black or Rocks or and others. So we don't have the diversification of these investors in the local market for the ESG, and I think that it will be there because the ecosystem is trying to promote this, and also in addition to some of the local currency funds for the asset managers, the local currency funds that to be with the ESG twist, and this is still not available currently. So final question for all of you, Mr. Mohannad, one question: what are your suggestions to enhance and develop the local debt market in Saudi Arabia? So we talk about it. The first one is to promote, raise the awareness of saving in the community, and also now we have a part of this initiative. We have signed agreement with MOU with Al Ahli Capital to enhance a product, financial product, and we're still experiencing. So the second thing, which is the goal that we work on, that Saudi Arabia will be the safest resort for foreign investment. We will do this with working with international banks. I agree with Mr. Mohannad. And in addition to increasing the encouragement and the for the international investor to enter the Saudi market, and we'll see a lot of initiatives and the minimum denomination and the creditability. All of this are is the operation access. So we're talking about the main point, which is the culture of the investor and the retail investor. He is the one who will make difference. The same answer. I think the most important thing to increase the investor base, because this will increase the equity of the market and the demand and supply, and it will be more efficient. The investors, of course, and we will see them in our market as a part, but the second part, which is the investors base, the local investor base, whether the saving funds or pension funds, and if we have there is a government tendency to create and to enable the funds that have mandates and invest in local currency market. I think this is something will contribute more. Mr. Abdulaziz, I have one point that represents a challenge today in front of Sukuk offerings to have ability to compete and also to finance through banks, which is the existence of Sukuk bonds and liability and balance sheet is entered in the Zakah incubators, and this is a additional cost on the company itself, in addition to the return that they pay in exchange of the offering cost. So I think this is a solution to have bonds as a liability and balance sheet to enter in Zakah incubation. It's very important to help to promote the bond market and its offering, because it's different based on its structure. For example, some of it as some of the acts or activities, but the rental activities do not apply for Zakah. So working with it in general without identifying the mechanism of bond, I think this will damage and affect the bond and the behavior in general. Thank you very much, our panelists, for enriching this forum, and thank you for listening. I'll hope to see you in other conferences. Thank you. And now with the final words by Faisal Sharif, the manager of a program of developing financial sector. In the name of Allah, the most merciful, the most gracious, peace be upon our Prophet Muhammad. Your Excellencies, Your Highnesses, our distinguished attendees, peace be upon you all. I would like first to thank you for your interaction and participation today in the work of the third version of FSC Talks, which became one of the important financial platform in the kingdom and also in the region. Because of the expertise that show the best international practices and also best important themes in financial sector. These themes comes under the development that we seek for in the financial sector. So, ladies and gentlemen, we are seeking to achieve the objectives of the program of developing the financial sector programs to support and enhance the local economy and also to motivate for saving and investment, and this is through deepening the financial institutes and also develop the financial sector to be one of the major financial market and also enhance the innovation in financial service to not contradict with the financial strategies. And also I would like to talk about the challenges and that based on the pillars of this program, which is the reduction of the covering of financial service and the reduction of savings and also the increase of the need to develop the infrastructure for automation and also the lack of resources for financing and also that the major challenges that the kingdom sees that require flexibility and continuous reviewing for the policies makes us in a desperate need for this ambitious program for that aim for the financial stability and the depth. All of them are enablers that will contribute to achieve the targets of Saudi Vision 2030. Out of 14% registered, our dear attendees, the funds, the investment funds as one of the important tools to diversify and the investment through allowing a major momentum of these financial bonds and also contribute to benefit from the diversification of its revenues and returns. And also one important talk I would like to highlight in regard of the debt capital. The program aim to diversify the financing of public sector and private sector through increasing and deepening the equity in stock market and also the debt market, and also to deepening as a percentage of GDP that reach to 24% by 2025 in comparison with the baseline registered in 2019, 14%. And this is to have alternatives for the banking financing, and this is where the question are, what are the returns to deepen the local debt market? Ladies and gentlemen, the size of investment regarding to the figures by the World Bank and international indicators that show the Saudi financial status, that we are the fastest growing economies because of the reforms that apply the transparency and governance and in all of its financial policies. And thanks to Allah, this efforts has achieved a lot of achievements related to the debt markets, and as His Excellencies the head of CMA, which is a link with the Clearstream, and also in addition to enhance the repo market. These achievements translate the efforts to achieve the vision objectives 2030 that we seek to support the financial sector through expanding the investor base to enhance the requirement financing for the local debt market and the program of in developing the financial sectors and to attract more capital. our dear attendees, I would like to assure you that the government of Saudi Arabia adopt policies and transparent procedures based on facts, and also we adopt the governance and transparency in all of its processes. And with a quick view in Saudi market, we can see the reflection of these policies on the trust of investors from around the world in Saudi economy. And this will to continue the growth, help us to continue the growth, to achieve figures that are unprecedented since years, and we expect that we continue this with a positive growth result for this result that enhance the economy and also open new prospects in front of the private sector, and also developing the promising sectors and also increasing the competitiveness of the Saudi economy. And also I would like to thank you again, our dear attendees, and I wish you all the best and success, and would like to meet you in the second version of the FSC that will happen in March 2023, and peace be upon you all.
شكرا جزيلا. ختاما، تقبلوا تحيات شركاء برنامج تطوير القطاع المالي. نشكر لكم مقدمكم وحسن مشاركتكم، ونلقاكم في مناسبات قادمة بإذنه تعالى. والسلام عليكم ورحمة الله وبركاته.